Hi, Jamie. Let's talk about what we need to know as we prepare to file that tax return for 2024. Let's start off with some important dates and deadlines.
Well, the tax filing season officially begins on Monday, February 24th. That's the earliest you can start to file your return. Most people, in fact, last year, 93% of people filed electronically. So to be able to submit your return either through a tax certified software using NetFile, or your accountant or your tax preparer can begin that filing process on the 24th. Of course, you can start preparing it well before then. Software is already available, but you can't submit it till the 24th. Now, if you still want to make an RSP contribution, you've got till March the 3rd, because March 1st falls on a Saturday this year. So you got an extra couple of days to make that RSP contribution, claim that deduction on your 2024 tax return. And then one final extended deadline is February 28th. You have until the end of February to make a charitable donation unique for this year to be able to still claim that on your 2024 tax return because of a special extension that the government announced due to the postal strike back in December of last year. So those are the deadlines. And of course, then we have the normal filing deadline, April 30th for most Canadians. And then we would have an extended deadline of June 16th, because again, June 15th falls on a Sunday, Monday, June 16th for individuals who are self-employed or who have a spouse or a partner that has self-employment income. So those are the dates that you need to know.
Let's get right into it then. What is new for this year, for 2024?
So we were going to have this whole big discussion about the whole capital gain stuff, but then it was postponed till 2026. What's interesting is that if you look at the new Schedule 3, which is the tax schedule on which an individual reports their capital gains, that schedule still has two reporting periods. It has gains from Jan 1st to June 24th, 2024, and gains from June 25th to the end of the year. And you might ask, why is that? Because remember, under the budget proposal, the first $250,000 gains are going to be taxable at a 50% inclusion rate. Anything above that after June 24th was going to be at 2/3. They scrapped all that, and that's now been officially delayed until at least 2026. So why the forms? It's a great question. It's a question we've actually asked the CRA. It was probably too late in terms of the manufacturing of the forms to adjust the forms. So you can fill it in accordingly, but it won't make a difference. At the very end of the form, you add the two periods together, and essentially you apply a 50% inclusion rate to the whole thing. So that's probably the biggest change in terms of the look, but it won't actually change your amount of tax. You still have a 50% inclusion rate for any gains realized in 2024. You should also note that if you invest in a mutual fund, you may get a T3 or a T5 slip, and those slips may have boxes for gains before and after June 25th. Again, those boxes go right into the software. They will populate the form correctly, but in the end, it doesn't make a difference. The inclusion rate is 50% for 2024. A couple of other changes, the AMT, the alternative minimum tax. We have a new system of calculating AMT for the 2024 tax return. The software will take care of that automatically. Most people will not be subject to AMT unless you have some very strong tax preference items on your return. And then finally, the only other big news I think for 2024 that's new is the limitation on expenses for short-term rentals. If you have something like an Airbnb and you rent it out, but it's in a zone where it's illegal to rent it out, according to your municipality, the government is limiting your expenses. You cannot write off any expenses, including mortgage interest, against that rental income. So just be forewarned, that is a new rule for 2024 tax return.
Let's talk about some of the home credits, deductions. First, home savings account. What does that look like?
So again, many individuals may have contributed another $8,000 in 2024 for a first home savings account, the FHSA. This amount is tax deductible in the year of contribution or in any future year. So just like we say with RSP contributions, you might want to decide whether it's worthwhile claiming that FHSA deduction in the current year or saving it for a future year in which you're in a higher tax bracket. For example, some of our clients have gifted $8,000 a year to each of their adult children to help them save for a down payment for their first home. If those children are, let's say, still in college or university, and they have very little, if any, income at all, and they already have tuition credits, they may not actually need to claim that $8,000 contribution in 2024, in which case they can save that and claim that in any future year.
I know that you had mentioned charitable donations and that deadline has been extended. Anything else that we need to know on that front?
So one final thing on the charitable side is that extension to February 28th applies only for cash or credit card type gifts. It does not apply to a gift of securities made in the first 2 months of the year. However, I should remind everyone that if you are now thinking about tax planning for 2025, or if you've made a gift of securities in 2024, that is probably the best opportunity in terms of tax effective charitable giving. Not only will you get a donation receipt for the fair market value, which you claim on your tax return as a donation, but in addition to that, you pay no capital gains tax whatsoever on the entire accrued gain on those shares. That's reported on a separate form on your tax return. And again, for 2025, I would put together a budget for how much you're going to give to charity this year in 2025, and consider taking some of those stocks in which you've got big capital gains, making a donation of those to the registered charity at some point in 2025. You're getting a donation receipt and you're paying no tax on those gains.
Going all across the board here, some new tax brackets, and maybe we can bring right into that the basic personal amount, the income that you earn that's tax-free.
Yeah, so approximately the number is around just over $15,000. Again, if you're in a higher tax bracket, you may lose a bit of that. And again, the software will do all that for you. And again, individuals have below this amount of income actually will not pay any tax whatsoever. And that's why we often suggest students are in post-secondary education. If they're a beneficiary of an RESP, a Registered Education Savings Plan, and they're receiving an educational assistance payment, which is taxable to them, they can actually take out up to that dollar amount, just over $15,000, and pay no tax at all on those RESP withdrawals. So again, something for parents and kids to think about for this year, for 2025, to be strategic. Because if you don't claim that basic personal amount, you lose it forever for a particular year. So something you want to try to take advantage of every year. And again, student with no other income, taking money out of the RESP can use that basic amount to shelter that from tax.
Lastly, if you are self-employed, what do you need to know?
So for individuals who are self-employed that are not considered to be employees, there is a statement of business income that you need to complete with your tax return. On there, you list your source of income, your revenue, but you also can claim, of course, a whole variety of expenses, and those are tax deductible. So again, take a look at that form. It's included with all the tax software packages. If you're working with an accountant or if you're working with a tax return preparer, you want to bring copies of all those receipts. CRA is looking at them. So you want to make sure that you've got backup for your expenses. If you've taken clients out for lunch, if you've done travel, you've got backup, you've got receipts that support it, you've got who you met with and the purpose of that meeting written on those receipts in case CRA audits you and asks you to justify why that was a legitimate business expense.